Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and welcome to another episode of Reverse Mortgage Radio. Glad you could join me today. However, we are going to be talking about something that a lot of people don't like: healthcare costs in retirement. But remember, this is Reverse Mortgage Radio. So I'm going to title this show for today, Tackling Healthcare Cost in Retirement, the Reverse Mortgage Solution. Yeah, you know where I stand on this. Personally, I think 95% of people who qualify for a reverse mortgage should have one. I plan to get one, but unfortunately, about 4% of Coloradans who could qualify for a reverse mortgage have a reverse mortgage. There's a lot of people struggling and living a life that is not as optimal as it could be in retirement because they don't understand reverse mortgages. And they believe what's out in the ether, that reverse mortgages are terrible. And it's just not true. It's not true. But you know where I come from. So that's the spin we're going to put on the show today, obviously. But I'm very glad you're here. Let's start off the show by talking about some statistics. I know statistics can be boring, but there was an article recently, just a couple weeks ago, that came out on the National Council on Aging. It's called Get the Facts on Healthy Aging. You can go to ncoa.org, I think is the website. Just Google National Council on Aging and you'll find it. But they say in here, nearly 58 million Americans are 65 and older, with projections estimated that the population of older adults will grow to 88.8 million people in 2060. And I believe what they're talking about, older adults, is 65 and older. They say on average, a 65-year-old can expect to live another 18.9 years. That's pretty good in today. I mean, so basically they're saying a man age 65 today could live another 17 years to age 82, and women are going to live about 19.8 years, pretty close to 85. That's just average. I mean, I've done loans for people 99. I've done loans for people 62, but yeah, we all hear about people dying in their 50s, which is really sad, but we hear about people living into their hundreds too. More and more people are becoming living beyond 100 years old. But what they say here, older adults are disproportionately affected by chronic conditions such as diabetes, arthritis, and heart disease. Nearly 95% have at least one chronic condition, and nearly 80% have two or more. I mean, that's sad that people are struggling with their health that much, but we all know that that's what happens sometimes. It doesn't have to if you're taking care of yourself. In fact, I was talking to a person today. He's not a customer yet, but he says he doesn't follow the old person manual. He says, he does push-ups and sit-ups, and he writes peer-reviewed articles. He does all kinds of fantastic things. The guy's super intelligent, and he sounds like he's super fit, rides bikes, and does all kinds of stuff at 77. So he's going to be one of these that goes way beyond the average. He'll bring the average up. But chronic diseases generally can limit a person's ability to perform daily activities and cause them to lose their independence and result in the need for institutional care or in-home caregivers or other long-term services and supports. The article explains that the leading cause of death among older adults are heart disease and cancer mainly, but falls. Falls are very, very tragic for people. They say here, 1 out of 4 older adults falls each year. 3 million adults aged 65 and older are treated in emergency departments for unintentional fall injuries each year. And as a result, every 11 seconds, an older adult is treated in the emergency room, and every 19 minutes, an older adult dies from the fall. They're the leading cause of fatal and non-fatal injuries among older adults, causing hip fractures, head trauma, and death. Just this week, I was talking with a customer of mine. I did a loan for her. I think the first one was like in 2014, and we redid it again in 2019. Super sweet lady. But she was telling me that now she's got problems with her legs, and she's 91 now. Sharp as a tack. This lady is just amazing. I love her. She calls me. She calls herself a pest. She's like, hey, Bruce, it's just your pest here. No, I tell all my customers, you get your statements from another lender. There are no reverse mortgage servicers in Colorado. All the servicers are out of state. However, you're still my customer. If you do business with me, I don't care who's servicing your loan, you're my customer. And if you need something, you call me. I visited a couple customers, her and another one this week. I did the latest loan for her in 2019. My other customer I visited later in the week, I did a loan for her in 2022. And I go out to their homes and talk with them. So that's kind of gives you an idea about the falls. And they say on here too, the nation spends $50 billion a year treating older adults for the effects of falls, 75% of which is paid for by Medicare and Medicaid. And they say if falls are not reduced, direct treatment costs are projected to reach $101 billion by age 2030. That's because more and more people are becoming 65 and older. So they say fear of falling can lead older adults to limit their activities, which can result in more falls because they're not getting exercise and things of that nature. They have physical further decline, which causes depression and social isolation, all that stuff. So it's really bad. Oral health. This is something that's terrible for people as well. They have in this article that in 2022, 36.3% of older adults had not seen a dentist in the last year. And a lot of that is because of the cost. They don't have the money for it. They say about 13.2% of older adults have complete tooth loss. The second customer that I did a loan for in 2022, she needed help because there was some miscommunication between her and the customer service department about how she was going to access some money, and she contacted me, and I printed up a form and went out and had her sign it. But one of the main expenses she has is she had oral surgery earlier this week, and she needs some money to help cover that cost. So these are just a couple of the issues that people face as we get older, and you know that if you're an older adult. It's just the way it is. You try to stay active. That's the key thing, staying active, eating healthy, and taking care of yourself. But it's also difficult when you don't feel good if you have chronic illnesses, especially some kind of long COVID or some other Lyme disease, chronic illness that saps your energy. But let's talk about the healthcare costs themselves, because really there's three main factors that are, well, I should say four. They don't have it in this article, but four main factors that contribute to high healthcare costs. Increased life expectancy. Because we're living longer, not everybody lives a perfectly healthy life till they're age 85, right? You start to go down in health sometimes. Not everybody, but sometimes. Inflation in medical care. That can also be a large part caused by government involvement, in my mind. I'm not a big fan of government. I like the freer the better. And I don't when government gets involved in stuff, it doesn't create more freedom. It creates more bureaucracies. One exception is the FHA insured reverse mortgage, though. It's amazing that this program is so good, but they've made so many changes in it over the years. It's becoming more and more bureaucratic. But also long-term care needs. That's very important. And it's the key thing with long-term care is you want to stay out of a nursing home. If you want to go to assisted living or something like that, or a home that has a lot of activities for you, things like that. Those are great. Stay out of nursing homes, though. We all know that. Everybody knows that. The problem is traditional methods of funding healthcare costs aren't always the best. You've got Medicare that covers it's health insurance. It covers problems with immediate problems. You fall and break a hip. Medicare will help you out. They'll even help you out with some rehabilitation things. But they're not intended for long-term care. They do not pay for custodial care. If you've got these chronic illnesses, Medicare will not cover it as far as the constant care you may need, having somebody come to your home on a regular basis. Also, too, the other Medicaid is unfortunately, Medicaid is really the last resort. You don't want to be on, nobody wants to be on Medicaid. I spoke with somebody that's looking into a reverse mortgage a few weeks ago, and the spouse, it's a man and his spouse is in a nursing home right now. I think it's classified as a nursing home, but she has a private room. Everything's really great, but it's costing him $12,000 to $13,000 a month, and they burn through all their savings already. And he said, "There's no way." He says, "I wouldn't put a dog in those Medicaid facilities." I mean, I haven't personally looked at them myself, but you hear not the best things about Medicaid facilities. Unfortunately, it's just the way it is when government runs something. That's the problem. So now we're a little ways into the show, and I have yet to explain what a reverse mortgage is. So let's talk about that. A reverse mortgage, most of the time, is an FHA insured loan that's specifically designed for people who are 62 and over. It allows you to convert a portion of the value of your home into money that you can spend. You're not taxed on it because it's considered loan proceeds. And remember, when I say a portion of the value, I'm not talking about the equity. I have people calling me sometimes. They say, I've got $400,000 in equity in the home. Well, the house is worth $700,000 and they owe $300,000 on it. And so they're close to 50% of the value, and I might only be able to loan 35% of the value or 40% of the value. They say, "Wait a minute, I've got $400,000 in equity in my home and I can't get it." No, because we have to pay off the existing mortgage first. And if you owe $300,000 on a current loan on your home, but we can only loan you, say, $250,000 on a new reverse mortgage, we cannot loan you enough to pay off the existing mortgage on your home. Now, you can still do a reverse mortgage if you can come up with the other $50,000 to pay off the current loan. But then the only benefit you're going to get, which is a huge benefit in my mind, is you're eliminating the principal and interest mortgage payment. You're still responsible to pay your own property taxes and homeowners insurance. You have to live in the home as your primary residence. You have to maintain the home and keep your name on title. As long as you do those 5 things, you never, ever, ever are required to make a payment on this loan. You can make payments, and there's certain benefits for that, but that's for a different show. But the way it works is you're still charged interest every month. So you're charged interest, but you're not paying it. So where does it go? It gets added to the loan balance. Every month, your loan balance increases because you have that interest you were charged but did not pay. Now, obviously, if you do choose to make payments, you can. I spoke to somebody earlier this week who said definitely his goal is to make the payments. This was a 77-year-old guy who talked about how he does things differently. Yeah, most people do not make payments on their reverse mortgage, but you certainly can, and there's a lot of benefits to that. Most people don't, so that interest gets added to the loan balance. And then next month, you're charged interest on top of that, so your loan balance grows and grows and grows over time. Now, since we're only loaning you 35 or 40 or 45% of the value of the home, odds are you're never going to come close to owing more on the house than it's worth. However, there are protections in place in case that does happen. It's called mortgage insurance. All FHA insured reverse mortgages have mortgage insurance. It's required. Mortgage insurance protects the lender. Basically, let's say that you live in your home for 20 years, you borrow $250,000 today, your home is worth $700,000. 20 years down the road, you now owe, let's say, $600,000 on the home. The home is probably worth $1 million or $1.5 million, but if that happens, your heirs inherit the home. They sell the house for $1 million, pay off the $600,000 owed on the reverse mortgage, and they keep the rest. However, let's say 2008 happens again, and you owe $600,000, but your home value has dropped to $500,000. You owe more on the home than it's actually worth. In that scenario, nobody's going to come and kick you out. You are not going to be, the loan will not be called due. But if you pass away, your heirs inherit the home. You don't want to pass a $100,000 debt to them. So the mortgage insurance will pay the lender. The lender gets their money, so they're not going to lose anything on the house. They take the house, they sell it for whatever they can, and the mortgage insurance pays the rest. And then your heirs walk away with whatever inheritance that you left them other than the house. So there's no inheritance from the house, but maybe you left them $100,000 in a retirement account, or all your personal property that's worth $500,000 or something. So you've got all that your heirs still inherit. The lender has no claim against any other asset that you have. Keep that in mind. So that's how a reverse mortgage works. Your loan balance is going to get larger and larger. You have to be okay with that. And I'm very clear about that. So you want to make sure you understand how that works. You want to see those numbers beforehand, or the projections. We don't know exactly what the numbers are going to do because we don't know how you're going to use all the money or what's going to happen with interest rates, things of that nature. If you have any questions how reverse mortgages work or want to talk about your specific situation, please call me. You can reach me directly. My name is Bruce Simmons. You are listening to Reverse Mortgage Radio. My phone number is 303-467-7821. 303-467-7821 is my direct line. That's forwarded. It's actually a landline, so don't text me there, but it's forwarded to my cell phone. And I will get your call. If I'm busy, I do not interrupt a visit with a potential customer or a current customer to answer the phone. Leave me a message and I will call you back. Okay. You can also visit me online though. I've got I spend a fortune on my website. So please visit my website. You can download my consumer guide. It's a free consumer guide, like 35 or 45 pages, something like that. And it's got all kinds of great information at reversemortgageradio.net. reversemortgageradio.net. And now finally, I can confirm. You can go on there in the upper right-hand corner in a red box. I think it says get a free estimate or something to that nature, free quote. Click on that button and give some basic information. Just your name, your address, dates of birth, and that's about it. Though the value of the home and how much you owe on the home. And it'll give you a quote on there. And it's a fantastic program. I'm not going to call you back, or you're not going to have to wait for me to call you back, I should say, to get the quote. It'll pull up the numbers right there, and you can see if you qualify. You can also download or click at the very bottom under resources at the bottom of the page. It says upload documents. So you can upload documents to me securely from my website now, reversemortgageradio.net. I spent a lot of money on it. I'd love it if you go visit. And you can hear this whole show, too, on there as well. It'll be posted next week. All right, let's get back to talking about how can a reverse mortgage help you with the healthcare costs, okay? So number one is a line of credit for unexpected medical care or healthcare costs. This is one of the best programs, and I work with a financial advisor. Well, I don't really work with him, but he refers people to me now and again who loves the idea of using your home equity to supplement other care possibilities for long-term care. So basically, he has people set up a line of credit with a reverse mortgage. Let's say you're 65. You don't need a reverse mortgage. You say, I don't need it. Why would I bother with a reverse mortgage? Because we can set up this line of credit. You're in a home you plan to stay in forever, right? We put $200,000 in a line of credit. You don't need it, and you're 65 now, but you don't need it till you're 80, 15 years from now. Roughly, given interest rates today, your money's going to double in 10 years. And so that 200,000 becomes 400,000. Another 5 years, we add another 100,000 or so to it. So you can have $500,000 available to you at 80, when now you need to start getting some in-home care. Maybe you just need somebody to come and cook for you, clean your house, take care of your yard, shovel the snow, whatever. You need somebody to come and help be with you while you shower. They're in the building, like this 91-year-old lady who has leg issues, and she says she will not take a shower in her home unless somebody is there, not in the shower personally, but in the house with her, so that if she does fall, she gets help immediately. She's not going to be laying on the floor until a neighbor comes 2 days later. So it's important that you've got this kind of care. But this can also supplement any other long-term care you have. It's not considered income, and it doesn't matter. So if you've got some other long-term care that's going to pay out $100 a day for in-home care, you can use this money to supplement it. It's a fantastic program. You're not being charged premiums on this. There's a lot. The line of credit growth rate is a fantastic option. The other possibility with the line of credit or a monthly payment is we can help you pay for those long-term care costs, long-term care insurance costs, I should say. As you get older, the cost of that long-term care policy might increase. You can use money from the reverse mortgage line of credit or a monthly payment to help cover those costs. You can also get a big lump sum. Now, there's certain restrictions of the amount you could pull out in one lump sum, but a lot of people will use that upfront lump sum to pay for medical needs in the home. They need respirators or things of that nature in the home. It's a fantastic option. All of the above can be very, very good for people to help. And also, too, it can preserve other retirement savings. Let's say your investments, you've got them at risk in the market, which hopefully you don't when you're 80 years old, but some people do. They don't stay on top of it the way they should if they don't have a financial advisor. And now the market has dropped like it did in 2008. I mean, there's a lot of people saying we're going to have a market correction, and I think we will. To what degree, I'm not sure. But if the market is down 10%, you don't want to be drawing money out of an asset that's now worth 10% less than it was last month and paying taxes to boot on it. So you can use money from the reverse mortgage to cover those costs. Like I said, it's 100% non-recourse too. So it doesn't matter if when you're 80, you've got $500,000 in the line of credit. If your house at that time is only worth $400,000, guess what? You still have that $500,000 available to you. You can actually borrow more than the house would be worth in that scenario. Odds are not likely that that's ever going to happen, but that line of credit is 100% guaranteed by FHA. And the lender can never come back after any other resources, so you've always got those available. If you pass away and you've got those other assets, your heirs are going to inherit it no matter what happens with the value of the home. So that's a fantastic program, a safety net that was set up when this loan was set in place. And that's, like I said, is one good example of government use, of government design. The fact that they designed this program to work the way it does is a miracle in my mind, because I just think it's a great program. We all, of course, want to say we're going to just die doing our favorite thing. I knew a guy in my Kiwanis club years ago, big hiker. He loved the outdoors. Sure enough, he was on a hike and he had a massive coronary and fell over. He was in his late 70s, super active up to the day he died, which is how we all want to go. Most people, I would think. That's the way I want to go. Maybe jumping out of an airplane or something. I don't know. We'll see. But I want to be active until the end. We all do. But the statistics don't prove that out. We know that odds are we're going to need some kind of pretty serious medical care at some point in our lives. Hopefully not too much long-term care, but if you live like the little lady that's 91 years old, that's super sweet. I mean, if you live like her, she's just slowly going downhill. And it's unfortunate for her because she is just, her mind is so sharp and she's so active and smart, but she knows that her physical body cannot live forever. And she's using her line of credit to pay for people to come in to help her cook, to help her mobility, to move around, to drive her different places. And her family can't always be there for her, so she pays for these extra features. And we were talking about how long this money might last in conjunction with any other money she has and things of that nature. But unfortunately, just that's part of getting older is having to use long-term care or other factors, because we don't want to be a statistic. I mean, everybody is to some degree, but we don't want to be one of the people who falls all the time or dies in an emergency room because of a fall. And a reverse mortgage could help you with that if you could afford to pay somebody to come and help you out when you need it. Or if you want to move closer to family for both your care and also helping them out. I've got a customer that lives down in South Littleton, and they are looking to sell their home. They have a reverse mortgage on it, but they want to talk about selling their home and buying a home up in Westminster where their son and daughter-in-law live with their grandkids. They want to be more involved with their grandbabies, maybe they help out their son and daughter-in-law by doing some babysitting now and again, but also their son and daughter-in-law are there to help them as they age. Right now, they don't need it, but having somebody close by as you age can give you a lot of peace of mind, knowing that you've got family. Friends are great, but family is family. Blood is thicker than wine, or whatever you want to say. Having family around you is very important. And you can use a reverse mortgage in that case to, say, purchase a new home. The Reverse Mortgage for Purchase program is a fantastic program. It allows you to buy a home that you really want to in an area that you really want to without having to make a mortgage payment. Because basically you sell your old home, you get the proceeds from that old home, and you put it towards, or a part of the proceed towards the purchase of the new home, and then we use a reverse mortgage to cover the balance of the purchase of the new home. And you can it allows you to buy a more expensive home than you might be able to otherwise, but also it could allow you to keep more of the proceeds from the sale of your previous home, which can help your finances tremendously and even help pay for some long-term care. Anyways, I would love to talk with you more about this. Please call me with any questions at 303-467-7821. You've been listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage in Denver. Please visit me online as well at reversemortgageradio.net. Go there, click the button for the free quote. Also, you can download my free consumer guide. Either way, do both. In fact, I'd love to have you do both, but give me a call with any questions. I'd love to talk with you. Thank you so much for listening today. I hope you have a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.